Is it a struggle? Yes, we have to realize our strengths and our weaknesses. Hi, and welcome to YYNet, and I'm your host, Janice, helping others to reach their goals by interviewing inspiring guests on great topics that's going to pertain to you and your lifestyle now and in the future, helping people to go from ordinary to extraordinary. Today's topic is current real estate trends. A little disclosure before we start, just to let you know, the opinions expressed here in this television show, they're just for general informational purposes only. Okay, they're not intended for specifically for you or any advice or recommendation. Please seek financial or mortgage advice before proceeding in anything important with finances in your life. This is just for educational purposes only. Today, I want to welcome on the show Susan Pfeiffer. She's been on the show before. She's a senior mortgage originator at NuMark Credit Union out of Crest Hill, Illinois. She's came on the show lots of times and given us quite a lot of information. So I hope you have watched those other shows. If not, please watch them again. And I hope this show is going to be informative to you also right now. But we're going to talk about the current market trend. We're seeing the interest rates are going up. I want to explain or have Susan explain to us how mortgage interests are being affected, foreclosures, buying new construction. We have a lot of different information for these next 25 minutes. So sit back, enjoy, and I hope you get something out of here. Welcome to the show, Susan. How are you?
Hi, Janice. Thank you. Thank you so much for having me back.
So want to talk a little bit about what's going on with the mortgage right now. It's 2022 in this episode, the year, and we're seeing everything starting to go up. The mortgage rates, the gas rates are going up. What's going on with the mortgage trend? Why are mortgages going up right now?
Yes, everything is definitely going up. These mortgage rates have gone up quite a bit, a significant increase in a very short period of time, actually. From October to about right now, we've seen more than a point increase. The 30-year interest rate is approaching about 5%, and the 15-year mortgage rate is approaching about 4.25%. So well over a point higher than it was just even 6 short months ago.
Wow, really? So how do you think, or why is that they're going up anyway? Is that connected to the Fed's raising the rates or what's going on with COVID? Why do you think it's going up right now?
That's a great question, Janice. So the interest rates have been artificially kept low for quite some time. The Feds have been investing in the mortgage bonds, and they've been doing that to keep these interest rates low over the course of the last several years. And they have indicated that they were going to slow that trend and they were going to stop doing that. And we knew that when that happened, these interest rates would climb. And we have anticipated that the rates would approach 5 to maybe even 5.5% this year. And that's just kind of what's happening very quickly out of the gates into 2022. I personally thought we would not see that happen until a little later into the year, but these rates have just been climbing very quickly. And Wednesday, the Feds did meet and they chose to increase the rate 0.25%, the prime lending rate. And that rate is actually different than the mortgage rates. There's a lot of misconception, if you will. There's a lot of misunderstanding about that when the Feds raise the interest rates, people assume that that means automatically the mortgage rates are going up.
Right.
And that's not actually the case. So the Fed rate is tied to what banks lend to one another at, and it's considered the short-term lending rate. So when the Feds raise that rate, the first things that will be impacted are going to be things like your home equity lines of credit interest rates, auto loan interest rates, credit card rates even, things of that nature. So it's not actually tied to the mortgage rates. The mortgage rates are still driven by the bond market. So when the mortgage bonds are, down, that actually drives the interest rates up. And vice versa, when the mortgage bonds are down, or I'm sorry, up, that drives the interest rates down. So the interest rates aren't actually, geared based off of this Fed rate increase. However, sometimes we do see that it will have an impact, such as Thursday. The rates kind of went up immediately Thursday. I was
Okay.
around 5% on a 30-year on Thursday just after that announcement, but then we did
Mhm.
have a little um, lowering on Friday. They lowered about an eighth of a percent back down to 4.875. So
Right.
hopefully they'll level out and because I do think the Fed's going to continue to raise these
Mhm.
rates probably a few more times this year. So,
Right. I
we'll
think they
probably
said
see.
they had about 11 meetings or something coming up. So I'm like, oh,
Yeah,
I know they don't raise the rates all the time in all the meetings. They just have meetings, monthly meetings, whatever. But they did
correct.
say that they have like 11 more meetings or something that it could go in the next year or so.
Yeah, so it's been a big change for people that have been hunting for that home for the last 6 months, for instance, that haven't been successful in finding it just due to a limited inventory. They were looking at what their payments were going to be six
Mhm.
months ago, and those payments have went up in some cases over $200 a month now just from this increase. So it just kind of depends on what price point they're at, but it's definitely affecting those home buyers out there. And unfortunately, there's some people that are having a hard time qualifying now because, of course, they qualified at a 3% or 3.5 rate versus this 5% interest rate. It's going to make it tough for some people, unfortunately.
Now, I know the Fed rates affects the borrowing from the bank. The banks borrowing in between each other, basically, or borrowing from the government. Now, when you said the interest rate did go up and it affects people and their buying power, so do rates get locked in at all for people when they're trying to purchase a mortgage or refinance, or is that even a limited time? Because things are fluctuating day to day.
That's a great question. So, when you're shopping for a home, unfortunately, you don't get to lock in the rate at that time. Once you
Oh,
do get a signed contract
hmm,
on whatever home you're going to purchase, and you would call your lender and say, okay, I finally have my contract in place, at that time you can lock the interest rates.
hmm,
Most lenders will lock in for 30 days. That's typically the average amount of time. However, you can lock in for a longer period of time, but you're not going to get that same interest rate. The late rate that you're locking in for
oh,
30 days, it's
hmm,
going to be a higher rate if you're trying to lock it in for, say, 60 days, because that's a longer period of time. There's
oh,
more of a time period where the rates could be volatile. So, because of that, you're looking at a little bit of a higher rate when you want to do an extended rate lock
okay.
option.
But even that's hard because right now there's not a large supply of homes. So you got 30 days, I hate to say it, but to fight and everything else to get that home under contract you want against everyone else wanting the same house because there's limited supply. And you got to get that, find the house, get under contract in 30 days to lock it. If it's taking people 2 months or 3 months, the rates are going up. So that's where you're saying that some people start looking maybe in October, hasn't found that dream home yet. Well, the three is now five.
Yep.
So how can those people, if they're not qualified, what can they do now? Or at least they're not qualified at the higher amount now.
They might have to look at a different town, for instance, maybe an area where the property taxes are going to be a little bit lower
Mhm,
than the area that they were hoping to be in, or they might have to look up instead of a single family, maybe they're going to look at a condo or a townhome, something like that. And,
mhm,
then there's going to be people too that are going to say, you know what, I'm just going to wait another year. I'm going to save, continue to save, and then we'll revisit this maybe fall or next spring.
mhm. Are you finding there's a slowdown in mortgages because of the interest rates?
Absolutely, 100%. The market is still very, very, very busy. I'm doing tons of
Right.
pre-approvals because there's that demand out there that people need to have the pre-approval. Of course, when they find their dream home,
Mhm.
they have to be able to jump on it immediately. So I'm still very busy with a lot of pre-approvals, but the mortgage business overall has slowed down. The refinances have slowed down considerably because, of course, many people that wanted to refinance have taken advantage of those interest rates and they've already done so.
All right,
Um,
that's
there's still some refinances. You're always going to have different reasons for people to
mhm,
refinance, such as, some people choose to refinance and pay off some credit card debt. Some people, unfortunately, there's divorce situations where you have to refinance and buy out a partner. There's, situations where you have to refinance and remove one person from the title, not even in a divorce, but maybe a parent or sibling situation. So there are going to be those, few in between situations where
right.
the interest rates aren't going to determine whether or not they're going to refinance. They're going to do it because there's a need to do that. So it's definitely slowed down from the aspect of, I'm at 5% though, and I want to take advantage of 3%. We're not seeing anything like that anymore.
Okay.
But there's a
Now,
lot of purchase business happening still.
do you think a lot really has to do with there's a really a low supply versus demand? Is that more why the mortgages is? It's not really the rates because I mean, I'm 52. So I remember my parents 10% for a mortgage wasn't unheard of back then. Even 6, 7% for a mortgage rate. So these rates are still fairly low. They are low, even at
They're
4 and
very low.
5%. So is
That's
it
very true.
right? So is it more or less there's just not enough homes out there at this point? And the properties have gone up.
That
That's
is
why things are slower.
That's exactly what's happening right now. There's such a limited inventory out there that, quite honestly, I think that the people are the ones that are really driving these prices up right now and their demand for needing to get into that property. Not that, the values aren't increasing because they are, but it's the demand of the people and what people are willing to do and what they're willing to pay for a home because they need a home so bad. So that's where we're seeing, big increase in the market as far as what people are willing to pay for properties. And it's been an interesting trend with what we're seeing, some people willing to do just to get their offer accepted. There's a lot of creative things, if you will,
Right.
that I haven't necessarily seen in the past that are happening right now just to kind of stand out from others. So you're seeing a lot of different things like that, but there really isn't a huge inventory out there. I'm hoping in
No.
the next 30 to 60 days, we'll see more homes hit the market with the snow hopefully coming to a stop and the
Right.
weather breaking. That usually helps things a little bit too.
Okay. Now I know we have COVID right now, so I know during the winter months and things, there's not a lot of people out there, and then homeowners don't want to have a lot of people in their home still at this time. But also, what's going on is we're hearing a lot of things that are happening in Russia and the Ukraine. Is that possibly, you think, playing a role in even the interest rates at this current time?
I think it definitely could be. And I think it could be also playing a role just in why some people are kind of scared to make a move. I think there's definitely overall fear, whether it's fear towards COVID or fear towards the war that's happening. I think you see that. And I think there's a lot of people that are cautious right now and, cautious to go and make that move. Actually, I had a conversation with one of my first time home buyers
Mm.
yesterday. And it was interesting what he said to me that it's hard for him to make this decision to purchase a home. He's looking in that 2 to 250 price range, we'll just say, but he said, I have to go buy a home from somebody that I've never met before. I can't really have any communication with this person. I
Right.
can't talk to the person to know how they've cared for the home. They, of course, you rely on inspections and things of that nature. But he said it's just such an interesting concept to think that we're making this major purchase and it's a taboo situation where you can't have a conversation with the seller. And I just have to trust that they've cared for the home and they've taken care of it. And he's
Right.
like, it's just a really interesting experience compared to when you think about buying a car or something, different that you go and you
Right.
test out and you kind of test drive it a little bit. You don't really get to do that with a home. So, and that was kind of what he was expressing to me is just the fear of the unknown, if you will.
Right. No, I know exactly what you mean. That's not occurring right now. Before, when you bought a home, it was kind of like you knew who used to live there, you knew their children, grew up. They had to swing in this corner of the backyard. You don't have that connection at all anymore. You know,
No.
And that is missing, unfortunately. It's just buy, and some people are buying sight unseen. They're not getting to actually even see the house completely. You have to make an instant decision when that house comes on the market because of the limited supply.
Absolutely. And there's a lot of investors that are kind of snatching up homes on the market too, which is unfortunate for first time home buyers or even repeat buyers that are looking to buy. There's a lot of cash financing happening right now where people are just paying cash. And, let's face it, it's hard to compete with cash when you're trying to get a mortgage. Or, furthermore, if you have a home that you need to sell, well, then that really kind of sticks out compared to the people that can just go in with no contingency and purchase
Right.
a home cash.
Right. Now, even right now, last couple of years, the government had put a stop on foreclosures in most markets. They've actually eased that up last year. I think it was November. Easy will it be for those people to refinance if possibly they've actually been without making payments for 2 years? So we see the interest rates are going up and they have financial difficulty. Where does that play for people going through foreclosure of them being able to refinance at a decent rate at this time?
That's a great question. So, yes, as you know, a lot of people took advantage of forbearance opportunities through COVID. And the rules around refinancing actually changed a little bit during COVID, but they changed improving for the consumer, in my opinion.
Oh,
So they could
great.
take advantage of, COVID forbearance. And let's just say they took advantage for 12 months. That's completely
Mhm.
acceptable. The rules are they have to make 3 regular payments. So as long as they've made their last 3 payments, then they're eligible for a new refinance.
Oh, wow. Okay. So once the easy came up, they started back on payments. So there weren't so none of the banks are really doing complete foreclosures unless necessary, or maybe that was prior to COVID, there were issues. So they are
Correct.
giving people opportunities.
Absolutely.
Okay.
Absolutely. We're starting to see some foreclosures begin again. And I think unfortunately we'll continue to see more this year as the year goes on. The courts with being closed, there's just going to be a backlog of working through those and the process that it does take a lender to
Mhm.
foreclose on a property. So it won't happen overnight, but I do think we'll continue to see some of those this year. But I would definitely say that lenders are going to try to work with people. It was such a hard 2 years for everybody. So
Right.
no lender wants to take someone's home. They really want to try to find workout options with people. And I do think that they're going to try to go through all those options first. In the event that there just can't be a workout option, then that's when we'll start to see some of the foreclosures continue.
Okay. Now, are banks even doing short sales? That was something that was occurring prior to COVID. Some people were doing short sales, predominantly more like in that 2008 to 2012. Are they starting to do short sales again, or is that something that's still out there?
Yes, actually, I have a short sale in process right now. So there's definitely some short sales that we weren't really seeing them much the last 2 or 3 years, I would say, but we are starting to see those pick up a little bit again as well. There's going to be some great opportunities out there with short sales for people to, get a great deal on a property.
Mhm. Now, I mean, each person's market is different, each person's house is different. But I'm wondering with short sales, will that actually be something that's going to be occurring if the market has increased so high? Are short sales even feasible? Should people
I
just even kind of just sell their home regular in the market to get out? And this way it might be even be easier versus having to deal with the bank, possibly.
Oh, absolutely. I think if people can do that, that's always going to be the best option.
Mhm.
Definitely they want to consult with an attorney as well. The issue where you see some short sales happen,
Mhm.
though, is when people, even though the home has appraised and it's worth more than what they owe, if they can't make those payments and if they're at a point where they no longer qualify for a mortgage forbearance due to COVID or
Mhm.
whatever the reason might be, then that's a case where you'll see a short sale get approved because they just can't have the means to make those payments. So
Okay.
they need the lender to agree to do the short sale until they're able to get the property sold.
Okay. So basically, instead of doing the foreclosure, the short sale also helps that if they're behind, the bank helps to negotiate the sell.
Correct.
Okay. So that makes sense now too. Okay. Um, I also had a question on like new construction because the interest rates are increasing, but you typically lock in a price on a home now. How does that affect? When do you even lock in interest rate on new construction?
Absolutely. That's a great question. So, with new construction, of course, a lot of the new construction builders that are out there have
Mhm.
their own lenders that they work with. And many times they will offer an extended rate lock option where you can lock in the interest rate for 9 months to 12 months while it takes to build the home. Of course, what they do is there's going to be a cap. So, for instance, let's just say you start out at 5%. The cap might be 0.875. So during the 12 months it takes to build the home, the rate can fluctuate up to that 5 to the 5.875.
Hmm.
Typically, they're given a float down option within 30 days of closing. Our company, we don't actually have any extended rate lock options. We do quite a bit of new construction. So the
Mhm.
interest rate is going to be floating until they get within the 30 days. So it just really depends lender to lender.
So you mean floating? 'Cause I haven't heard that term. So that's why they have a cap. So if it goes lower, you can bring your rate down. And
Correct.
then that's the maximum typically. But what happens to the extreme with that max? Is there like may not apply?
So basically, the extreme is just whatever that cap is. If it's 1%, then it just can't exceed that. And then the bank or the lender in that
Mhm.
case is willing to absorb whatever the increase is. They're just going to absorb that.
Now, when that happens with a cap, do people have to qualify for the cap's max? Oh, you're nodding
Absolutely.
your head. I'm like, oh, that's not good.
They sure do. And sometimes
Oh,
we can run into issues with that too.
yeah.
The
Wow.
good
I didn't.
news though is with these, limited with their supply issues that's happening
Mhm.
across the board with new construction.
Right. The
Um,
wood. They're having a problem
yes, the
getting treated
wood.
wood.
Exactly. And most builders, when you build with a big builder, especially, they're going to lock in when you go under contract. You do get to lock in at that price. It's going to be different if you have a custom builder that only builds, maybe 3 or 4 homes a year, and you're funding the construction or the build, if you will, as they're building. Well, then you're probably, in most cases, you don't get to lock in that cost. So every price increase that the builder faces, technically you face that as well.
Oh, wow. Yeah, I would assume so. An independent construction builder, the prices change, you have to pay that out of your pocket.
Yeah,
Right. And I know the
absolutely.
lumber has been a big problem with supply that I've heard like 30% or better has gone up on just lumber alone. And that's affecting and trickling down to the new home prices.
Absolutely.
Wow. So buying a home, and if you have that high cap, you have to qualify for that cap now. So what happens? I mean, I know this is something in each person's individual, but if they don't well, they have to qualify for the cap in the beginning
Correct.
anyway. So if they don't qualify for that, they can't even look at the new home or put it under construction. Then it would end right there, the deal then.
Absolutely. Another thing that we have to look at too is,
Mm,
when you start to build a home, you come up with this base price, right? The base price of what
right.
the construction is going to cost. Well, then you get to go to their fancy design center and you
Yes.
pick out all the fun stuff. And that's where
Granite
the prices,
countertops and
yes.
nice wood floors, and then the price keeps going up, up, up.
Exactly. So we have to account for that too, because if
Mhm.
you're going to add 35,000 in upgrades, well, and then you get there and you decide, oh, now it's 55,000, we need to make sure that you can qualify for all that as well. So
Oh,
there's many
wow.
moving elements with the new construction that have to be considered. Otherwise, at the end, the builder ends up with a very expensive home that was designed particularly for an individual that can't close on it, and then they have to try to sell that home. So
Right. And then people, now they don't have to qualify. And that was a question I have. When you have your own home and you're building new construction, which isn't going to be built for, say, 12 months from now, okay? Do you have to qualify for both mortgages, or you just qualifying assuming you're going to sell your current home?
that is a great question. So you typically do have to qualify with both mortgages.
What?
Yeah.
Oh,
Yes, you do.
okay.
There's different programs out there. There's something called a bridge loan. So say that you don't have
Mhm.
a mortgage on your home, you can do what's
Okay.
called a bridge loan and kind of tap into that equity so you can come up with your 10% or whatever you need to put down to start that build. But you
Right.
still do have to qualify for the taxes and insurance and whatever that cost of that loan would be. So the only way that you can really avoid having to qualify for both mortgages is A, if you're going to sell your home prior to the closing. And there's no deadline on that. It's just we have to know that that home is going to be sold prior to closing on the new construction build. Or if we get what's called a clear to close, let's just say that the person buying your home, as long as their financing is clear to close, then we don't necessarily have to hit you for that mortgage payment, because we know that even though you're not going to close on it until after the fact, this person's financing has been secured. There's no issues with it. And then that kind of eases some of that risk for the lender.
Because you'll be owning two homes. So you have to qualify for two homes because technically your new construction, you're under contract to purchase that home and you have the existing home. So
Correct.
either that home has to go or you qualify for both anyway to make sure just in case it doesn't sell, you have to be able to support both.
Exactly.
Ooh, that's probably why I'm not in a new house right now.
Me too.
Yeah. Wow, that's a lot because I don't think a lot of people even think about that. You think, well, I'm going to sell my home. I don't think, okay, well, I need to make sure I can support this and that new payment just in case, because most people don't want to think about the just in case, but banks do and mortgage companies do want to make sure in case you still have both, you have to qualify for both. Wow.
Absolutely.
Absolutely. And that all would apply under the cap too, or at least you would combine the cap with your mortgage, existing mortgage to qualify for both
Correct. And
or
with
the
the
bridge
market
loan.
Yes, and with that market changing so fast, God forbid if something did change before you closed and you sold your other property and the market were to decline, well, you have to think about all those things. And that's when, sometimes over the years, people have faced hard times trying to sell that home. So that's where there's that risk for the lender. They want to make sure that that's going to happen.
Okay. Um, well, we have a few more minutes left, just a couple more minutes left. Is FHA still viable during this time with the rates going? I know at FHA, you have to pay the mortgage, the principal mortgage insurance on top of that.
Yes, I'm doing a lot of FHA right now, and sometimes FHA is just more attractive depending on the person's credit score. You get a better interest rate. The interest rates are still under 4% on FHA. So when people are looking at a
Oh,
5%
really?
almost, yeah, we're
Mm.
at about 3.75 on FHA. So there's a lot of people that will prefer that. And quite honestly, I've got people that are, at around a 3.25 on an FHA loan that will reach out now to try to refinance and remove the PMI. But then when we compare, okay, now you're going up to maybe 4.875, but no PMI. Not everyone does it because it doesn't always make sense. A lot of times your payment would increase. So it's like you're better off just paying that private mortgage insurance until we see what happens down the road.
Okay. We got about 2 minutes left. Real briefly, are arms still something of interest? The 5-1, the 5 fix, and the 1. Is that
That's a
really important right now?
That's a great question. So we are doing some arms on some of the creative financing we're doing when we need to tap into people's equity. For instance, if they're doing new construction or just trying to buy another property, we do a lot of arms because again, it's going to be short term. We know they're not going to keep that property for a long time. They're going to get the new home and then try to sell that. So arms are still, I'm not going to say they're super popular, but they're still, necessary.
Okay. Yeah, I was wondering about that because I know the past arms before the big crash of fiasco of the real estate in 2008 and everything else, those arms really came, up and the interest rates went up and people were crashing and losing their homes. So I didn't know if that was still something viable people do nowadays.
Yes, absolutely. With caution, I say though.
Yes, use with caution, definitely. Think about that with caution. Okay. I thank you very much for being on the show again. Any 30-second advice for anyone?
Thank you so much for having me. I would just say that to stay persistent. If you're looking for a new home right now in this market, don't give up, stay persistent. The right home will come out there. It'll be there for you, and sometimes you just got to wait a little bit longer, but good things do come to those who wait. So I think just the key advice there is to not give up and stay persistent.
Stay persistent. Yes, and pay attention to those finances. Seek financial advice. Like I said in the beginning of the show, the opinions here was just for educational purposes only to inform you. Please seek advice. Please seek people that are mortgage consultants. Susan's been in the business for a long time, and I appreciate you coming on the show and giving us all your sound advice. I do appreciate that because a lot of people don't understand what to do.
Thank
Yeah.
you for having me.
Thank you. Thank you. So this is why not? Our topic today was the current mortgage trend. We appreciate any advice that you have in the future. Please contact Susan. She'll have her information up there. Contact your local mortgage companies, your banks. Seek financial advice for any step in your life right now. Okay. This is why not? Thank you for watching. Please like us on YouTube and Facebook. And if you have any comments or questions, please write us. Thank you very much and have a wonderful time. Thank you, Susan, again for coming.
Thank you
And
for
everyone have
having me.
You're welcome. Thank you. And everyone have a wonderful evening. Bye-bye.